And as soon as we get back above this range, I think hopefully we'll be off to the races. As you talk about price targets, for me, I like to just keep things very simple, looking at the 161.8 and the 123.6% Fibonacci's. So it's not rocket science. You take it from the high to the low of a consolidation, and basically using this, if we can rebuild some of that upside momentum, particularly if we can make new all-time highs, I'll basically be targeting 117,000 and 130,000 for my price target on Bitcoin.
This episode is brought to you by Uphold, which is a great crypto platform that I've been using since 2018. Uphold makes it easy to buy, sell, trade cryptocurrencies like Bitcoin and altcoins. In fact, they have 300 plus cryptocurrencies on their platform, and they carry precious metals such as gold and silver, and you can swap between these assets. So it's really unique. Uphold is safe and reliable. I've never had any issues with them, and they are 100% reserved. You can review their transparency report. They don't commingle or lend out your funds. Now, Uphold recently launched a great product called Uphold Rewards, and it's packed with many benefits. You can earn up to 5.25% on stablecoins, get 24-hour early access to new token listings, and unlock exclusive crypto insights. And they support a variety of stablecoins, such as PYUSD, that's PayPal stablecoin, Circle's USDC, and USBC. They will be supporting Ripple's upcoming launch of RLUSD. So this is a really great rewards program. And if you'd like to learn more, please visit the link in the description. Hey everybody, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. My guest today is Caleb Franzen, who's the founder of Cubic Analytics. I've had I'll edit that. I've had Caleb on in the past, and we've done a deep dive into Bitcoin and different altcoins and where we think the market may be going. So Caleb, great to have you on.
Dude, always looking forward to these, man. Every time I get a DM from you on X, I'm like, let's go. Tony's bringing me on. Let's bring some alpha to the people. So glad to be doing this, brother.
Yeah, absolutely. And Caleb, I value your insights and your newsletter. And folks, you can check out Caleb's newsletter. Link will be in the description. But value your market insights. It's very helpful, and I've learned a lot from you. So certainly want to get your thoughts on what's happening now. And we'll start with Bitcoin as the measuring stick. Where do you think Bitcoin's at? Are we seeing the start of some sort of recovery?
So I think first and foremost, not to redirect your question here and take your question hostage, but I think broadly speaking, we're just really in this kind of risk-off market dynamic. This isn't explicit to Bitcoin. It's not explicit to crypto. It's happening in stocks as well, right? So generally speaking, we're seeing a lot of these risk-off dynamics kind of take their way through the system. And so in that kind of market environment, it doesn't take a rocket scientist to figure this out. The riskiest assets struggle the most during risk-off periods. And so that's really what we're continuing to see. I think one of the interesting things as we really kind of focus specifically on crypto is the fact that a lot of the trend that's manifested in the market over the course of the past year, even the past 2 years, is still intact today. And what is that trend? It's that Bitcoin continues to dominate pretty much everything else, especially when we're measuring it on the aggregate. And so very simply, we can look at something like Bitcoin dominance, right? And that's continuing to make basically new cycle highs, at least on a closing basis. And so in that kind of market environment, I think that's one of the reasons why sentiment has been particularly so negative, is that a lot of investors are still under allocated to Bitcoin in a market environment where Bitcoin is continuing to be rewarded pretty much the most. And of course, there have been some select altcoins that have done really well relative to Bitcoin. But the problem there is their success doesn't last for long, and it typically dissipates relatively quickly. And so, it kind of becomes like the flavor of the month, right? Where, Solana was a big outperformer, particularly at the end of 2023. And then in all of 2024, I kept waiting for that Solana move to keep going through a period of outperformance. Didn't come, right? And now that Solana relative to BTC chart looks terrible. Ethereum struggled all cycle. And now I think one of the big kind of darlings, of course, is something like Ripple and XRP. And so, congrats to you and your community, because you guys we're certainly on the right side of that, right? And that's where a lot of the strength kind of continues to be, is in something like Ripple. And so, but again, I think that just really kind of speaks to the fact that if you're not in something like Ripple, right, or BTC, you're really struggling in this market environment. And by the way, right, like you guys know this pretty much better than anyone else, but the Ripple investors were really struggling in 2023 and 2024. Yeah. That was a really hard time to be holding XRP, right? And so, from that standpoint, again, your patience was really just tested. So look, again, just bringing this back full circle here, right, is we're just generally in a risk off period. The one thing with Bitcoin that feels relatively solid is the fact that it's trading back above its 200-day moving average. So I have some charts, we can go over those in a minute here, but that's very different than the rest of the crypto market, which is continuing to struggle and trade well below its 200-day moving average. So, bad sign there, right? We got to see that improve.
Yeah, absolutely. Well said. And I often tell people you have to be diversified and you have to treat Bitcoin as what it is, the leader of the market. If you don't have exposure to Bitcoin, you're really missing out because there's no guarantee your altcoin is going to run. We see the majority of the capital flows into Bitcoin. Don't get me wrong, there's altcoins that suck in liquidity as well, but we've seen the rotation of liquidity from whales. Like they'll start with Bitcoin. Bitcoin usually leads, right? And then all of a sudden, meme coins start popping up and this coin starts popping up, right? But then they get bled out, right? Like the meme coin market is dried up now and you'll see liquidity most likely flow back to Bitcoin.
That's been one of the most interesting things about this cycle, right? Is like the typical model of Bitcoin going first, Ethereum following, and then seeing a lot of flows into altcoins. It just hasn't stuck, right? It hasn't worked this cycle. In fact, ETH BTC continues to make new multi-year lows, right? I mean, that I think everyone and their mom has called the bottom on ETH BTC, and everyone gets proven wrong every single time, right? So again, just really speaks to the pain that's really occurring throughout the crypto market. And look, Bitcoin has not been immune to that pain, but it certainly outperformed everything else on the aggregate.
Do you think the pain, right, and the risk off moment we're having right now is a combination of strong run up in Q4, so a natural correction was needed, right? Nothing goes up in a straight line, but then Trump comes in with tariffs, creates a lot of uncertainty across the markets, right? Because it's like, oh, this country is going to fight now, and then the stock market sells off, crypto sells off. Do you think it's a combination of those two things?
Yeah, I've been thinking a lot about tariffs because I was very dismissive of them in the first place, because what do we know for a fact is that the market is a forward-looking pricing mechanism, right? And so the market looks forward into this, and Trump's message on tariffs was very clear in the election, running up into the election, right? He said he was going to bring tariffs around. And so when the market is a forward-looking pricing mechanism, it's already discounting that into the future, right? And so when Trump got elected, we're seeing assets rip across the board. It's not a surprise that tariffs were coming, right? So somehow the market really missed the narrative on this one, right? And in my opinion, though, I think I hate to tell the market that it's wrong, right? And so I try to stay away from doing that as much as possible. And so in my opinion, something else is taking place in this market environment that's causing this risk-off period, whether it's lower growth expectations, reinflation, which tariffs are certainly a part of. It's really hard to know exactly what that is. I'm thankfully not in the business of having to explain what is the market doing and why. I just care to know how to position myself in a market environment because I'm an investor, I'm a trader. All I care about is making money. It doesn't matter what the causality is.
Absolutely. Well said. So show us your Bitcoin charts. What are you anticipating in the short term, the midterm, and then the long term?
Epic. Let's do it. So I kind of alluded to this earlier, right? But Bitcoin itself is trading back above that 200-day moving average cloud. And so we could see that there have been these periods at times where we fall below them. This occurred in Q2 and Q3, or excuse me, in Q3 and Q4 of 2023. It also occurred in Q3 and Q4 of 2024. So we can break below the 200-day moving average cloud, but you'll notice once we get back above that range and in particularly stay above it, that's when the good things really happen. And so I'm very enthused at the fact that Bitcoin is now trading basically just shy of 87,000, back above that 200-day moving average cloud. But we need to see continued strength here, right? One of the things I tell subscribers of Cubic Analytics all the time, I talk about it on X, whatever the case is, it's one thing to get back above the 200-day moving average cloud. It's another thing to stay above, right? Mm-hmm. So just because we're above the 200-day moving average cloud doesn't mean we can close our laptops and just go chill on the beach. I'm here in Montenegro. I wish I could just be chilling on the beach, but I need to continue to verify that Bitcoin is trading back above this range, right? So this is really important. Let's also talk about the triple EMA indicator, right? This is my personal indicator that I use. It's no secret. It's the 21-day EMA in blue, the 55 EMA in red, and the 200-day EMA in green. Ideally, one thing we know for a fact is the way we can characterize an uptrend is by the price of any asset trading above its moving averages. So whether we pick the 20-day, the 50-day, the 100-day, the 200-day, it doesn't matter. what we know for a fact is that uptrends are characterized by the price of an asset trading above its moving average. And so when we're looking at this chart right here, again, looking at the 21, the 55, and the 200-day moving average, we need to see Bitcoin get back above the 55-day EMA here shown in red, right? And so we need to see continued bullish evidence continue to stack in this market environment. We're moving towards that direction, but we just don't have complete and full evidence of that quite just yet, right? So again, we're seeing constructive price action, but not outright bullish price action, right? So this is a period of digestion here. This is a period of indecision. For all we know, these moving averages right now, particularly the 21 and the 55, these could basically act as dynamic resistance, right? That's what these moving averages are useful for. And so we're currently in that zone right now where we should be paying a lot of attention. And as soon as we get back above this range, I think hopefully we'll be off to the races. As you talk about price targets, for me, I like to just keep things very simple, looking at the 161.8 and the 123.6% Fibonacci's. So it's not rocket science. You take it from the high to the low of a consolidation, and basically using this, if we can rebuild some of that upside momentum, particularly if we can make new all-time highs, I'll basically be targeting 117,000 and 130,000 for my price target on Bitcoin in the medium term, right? This is basically looking at this individual setup. As of right now, nothing has necessarily invalidated my 175K price target for Bitcoin, right? And that's been a cycle price target. I first published that in 2023. And that was when Bitcoin was trading at like 30,000, right? And so people kept asking me, Caleb, this is your cycle price target, but when should we expect that? Is that going to happen this year? That was in 2023 or in 2024. I was like, I don't know. I don't care. It's just my cycle price target. Whenever we peak, I think we peak at 175, right? And so, clearly we're still not there yet, which means we still can get there, right? So,
So question on the Fibonacci levels that you have there. And this is, kind of out of ignorance. What about the 2.618? Is that possible or higher? 3.618?
Yeah, I haven't even looked at where that level actually is, but that's definitely a valid level for sure. I use the 261.8% in other analysis that I've done before, and I'm just kind of curious, now that you're mentioning it, let me just see here on my own chart before I start sharing things. The 261.8% level right now is measured at 162K. And so, hey, that gets us relatively close to my 175K price target, right? So if we do get that breakout, that 261% Fibonacci gets us to 162,000.
So question for you. I'm trying to balance this all in my mind. Like, how do you factor in time with, the cycle's usually wrapping up in the Q4 of the third year, right? And possibly a blow off top coming at the end of Q2 and those Fibonacci levels. And also knowing that there's only a certain percentage Bitcoin theoretically could run. It can't just skyrocket to 200,000 in a couple of months. Now, is it possible? But yes, but is it probable? Probably not, right?
Sure. Yeah, no, I would agree with you there. And, so one of the parts of your question there was basically highlighting the fact that on average, Bitcoin peaks about 16 to 18 months after the halving. And so, for this current cycle, that basically puts us in end of Q3, early Q4 this year, right? And so, we're getting closer and closer to that due date, right? And so, look, I don't follow the 4-year halving cycle. I think it's an interesting blueprint. I think, Occam's razor, the simplest explanation is often the best. And so, if the 4-year cycle has worked and you just close your eyes and, follow the 4-year cycle, it's worked pretty damn well, right? So I don't want to be dismissive of it, but I also recognize other things in the market can take place that can make this cycle very different. One of the things that we were just talking about it. This cycle quite literally has been different because Ethereum has not really participated. We have not seen a broadening out in terms of alt season participating. It's definitionally, factually, unequivocally, this cycle has been very different than anything else we've seen. So could this cycle last longer than the typical 16 to 18 months peak after the halving? Yeah, it could, right? And so again, I don't want to limit or put a cap on what Bitcoin or what alts can do this cycle. I just want to follow the price action, right? And so that's where, paying attention to things like the different moving averages, some of these statistical indicators, right? This is what's going to keep us on the right side for a fact.
So great point. And I want to make sure I ask you a follow-up question on that for the listeners and the viewers, because a lot of people, they get impatient and they don't know how to kind of navigate the markets because, to your point, the cycles can do different things. We just don't know. We don't have a crystal ball, but we're looking at the data. So is your path to taking profits simply based on price, meaning that, hey, to hit my target, execute on the profit taking, or is it like you're not really looking at that 4 year thing? You're just looking at, hey, if it's going to hit 125 sooner than expected, then done deal, or I'm going to wait longer.
Yeah, great question, because I think that I'm going to let price kind of dominate this, and so I think first and foremost, probably about a month ago, I think we really shifted, where particularly talking about the equity side of things and also applying to something like Bitcoin, is we're probably closer to the end of this bull market than the beginning, right? Stocks basically bottomed 2.5 years ago, right, or more. Same with Bitcoin, right? And so from that standpoint, right, I mean, do you think that the cycle is going to last for another 2.5 years? I mean, probably not, right? We're probably going to have some 20% drawdowns in equities over the course of the next 2.5 years. Who knows, right? But one of the things that I published recently is I think we have shifted into a new regime where buying the dip has been really profitable. And now I think selling the rip is much more palatable in this market environment due to overall heightened uncertainty. And certainly I have invalidation criteria around that. It's going to take a lot of work for those invalidation criteria to kind of get checked off my box, or have those boxes checked, excuse me. And so from that standpoint, right, I think if we are making new all-time highs in BTC over the next 3 to 4 months, which I think is entirely possible, I'm going to be reducing some risk. I'm going to be, I mentioned this to Cubic Analytics subscribers basically about a month ago, saying, yeah, I'm probably going to look to take 10 to 20% of my Bitcoin position off the table. And so, sue me, I'm still going to keep 80 to 90% of my Bitcoin, right? Anyways, so I think from that standpoint, right, it's going to make sense to start taking some profits here, particularly if we can get that continuation in a price discovery, right? If we get that trajectory getting back above 110, trending towards 130, getting to 150, right? It's gonna make sense to start taking some profits across the board.
Yeah, I plan to do the same thing. And like you, I'm navigating by price. So I have on my spreadsheet taking profits here, right? X amount, not selling everything, but doing the same thing, laddering out on the way up. And I will definitely be doing that for altcoins. So on the topic of altcoins, we mentioned XRP, or you mentioned XRP earlier, and it's been getting a lot of liquidity. It's been performing well. Can we take a look at the charts for that and what you're seeing in the short term, midterm, and long term?
Let's take a look. So I got the Ripple chart with me right here. And so, again, look at this relationship with the 200-day moving average cloud. As I alluded to earlier, right, 2023 and 2024 for the most part was a lot of pain. We got a lot of chop around this 200-day moving average cloud. It was a lot of indecision, a lot of sideways price action, right? Basically just stagnation. And that's an investor's nightmare, basically, is when your money's basically doing nothing for you. And so getting this massive move here, the best thing that we can see is the fact that it's still staying above this 200-day moving average cloud, which is basically between $1.76 and $1.93. Right. By the way, I forgot to mention this earlier, but I have the 200-day exponential moving average in blue and the 200-day simple moving average in red. So I just want to be very clear about what each of those two lines are, right? And look, I have to admit, this chart in and of itself is not looking bullish in terms of the actual price action that we're seeing here on the chart. Some people might look at this and say this looks a little bit like a head and shoulders top. Could it be? I don't know, maybe. All I know for a fact right now is that this thing is continuing to trade above its 200-day moving average cloud. And by the way, that's very different than looking at total 3 excluding stablecoins, right? So total 3 is total crypto market cap excluding BTC, excluding Ethereum, and then I'm also manually extracting USDT and USDC. We're trading below that 200-day moving average cloud. We are trading below those mid 2024 highs, right? This is not a good sign, right? So when we're seeing that differentiation where Ripple is trading above its 200-day moving average cloud, while the rest of the altcoin market on the aggregate is not, that's showing a sign of relative strength, right? So a lot of traders like to look at relative strength. We can also look at others. This is total crypto market cap excluding the top 10. You can see once again, we're trading below that 200-day moving average cloud, which is right here. You'll also notice I have this descending trend line very similar to what was taking place in the majority of 2024. And as soon as we were able to break above that trend line, break above the 200-day moving average cloud, we were off to the races. We could be doing the same exact setup right now. So I'm not ruling out that this market could have more upside. I'm just very cautious in this market environment. The market needs to show me it's bullish. It's not showing me that right now, right? Some of these individual altcoins, we could look at Ripple, look much more constructive. But for the rest of the market on the aggregate, we just got to see a lot of improvement take place.
So on that note, because the same thing goes for the stock market, right? You look at the NASDAQ, S&P. Do you think there's some sort of catalyst that is around the corner, like a macro factor of, the Fed recently said, hey, we're ramping down QT, that they may signal QE come April? I don't know, right? Just even to mention, because markets are forward looking, like you were saying, it could cause everything to swing the other way.
Yeah, it could be. I mean, I think if we just kind of zoom back to Powell's press conference last week and even just the FOMC policy decision where they came out, and in my opinion, it was pretty unexpected. It was the biggest news of the day, actually, is when they came out and said that they're going to start tapering QT, right? That doesn't mean that they're ending QT, but they're just going to reduce the pace of QT. That's an incrementally, let's think about what that means, right? That's incrementally less tightening, which is closer towards easing than it is towards more tightening, right? So that's a really good sign overall. And we've already seen a really positive reaction on the back of that news, right? Bitcoin, that was what got Bitcoin back above its 200-day moving average cloud. So I think you're right, Tony. If we get more news along those lines, and by the way, I'm not expecting an announcement of QE anytime soon, right? I think we can expect the Fed to lower interest rates gradually. I still expect them to cut in the back half of this year, probably starting no sooner than July. Maybe in June, we'll see. But those incremental rate cuts are going to be very accretive. I think we just, what's it going to take? And I really don't have the answer. I've tried to think about this so much.
So
I think,
could it be something breaks and then, I'm not saying I want that to happen, but something breaks and they have to pull a March 2020, start the printer, right? Because it's all hands on deck. We got an emergency.
If we do see something like that, that will be bullish down the line because it primes the system with liquidity. But what it's going to mean is we're going to have to suffer a 30 to 50% haircut first.
Yeah.
So, it's bullish, but it's not, right? And
right.
The typical economist dilemma here is like, it's good and it's bad, right? So, it's hard to know for certain. I think one of the things that maybe you could have be an appropriate comparison would be like the March of 2023 banking crisis, right? Where the Fed was able to basically backstop the system in combination with the Treasury, with the BTFP, right? And basically provide pseudo liquidity to the market in that particular instance, right? And so that certainly backstopped the financial system, which was very accretive to asset prices. I mean, pull up a chart of the NASDAQ or of Bitcoin, and they all bottomed on like March 13th of 2023, which was when the banking crisis happened, or maybe it was March 11th, either way. So, maybe something like that could happen, but I don't want to take that risk personally, right? I don't want to suffer the risk of a potential actual banking crisis just to look at it, 6 months later and say, oh, thank God everything was fine. And, asset prices are up 50% across the board. So I would rather look at this through the lens of one of the catalysts that's really been driving this bull market in equities and Bitcoin has really been the fact that the economy has been resilient and dynamic, and we've had disinflation, and that the Fed has been on net forecasting an easing cycle, right? Lowering interest rates, ending QT, these kinds of dynamics. So what's going to continue this bull market is the same thing that's kept this bull market alive the entire time. We need to see a resilient and dynamic economy. We need to see more evidence of disinflation. We need to see the Fed commit themselves once again to cutting interest rates instead of pausing like they have for the past, whatever it's been, 4 to 6 months, right? So in my opinion, those are the things I'm cheering for. I'm not saying you're cheering for a calamity event, but I think as investors across the board, that's the dynamic that we should be focused on, is seeing more evidence of the things that have brought us to the dance, right? I mean, let's continue to cheer for those dynamics.
Yeah, absolutely. So let's take a look at Solana and then Ethereum for the altcoins.
Got it. So I actually have a lot of different altcoin charts, right? But this one here on Solana is really standing out to me. The fact that we've continued to defend this kind of 120 to 125 zone, this has been super impactful. You'll also notice I have a Fibonacci here drawn from the 2022 bear market lows to the recent highs, look where that 61.8% Fibonacci level is trading, right there at 117, which is where we've continued to defend. So I think as investors, we should be thanking our lucky stars. We have a very clear-cut line in the sand. If Solana falls below 117, I'm selling it. I'm out. I'm dipping. That's my stop loss right there. Clear-cut line in the sand, right? But look, you'll notice, where are we trading with respect to that 200-day moving average cloud? We're trading so far below its 200-day moving average cloud. It hasn't been this far below the cloud since 2022, right? So this is really showing the severity of how much this trend has deteriorated just here in the last 2 to 3 months, right? Not even. So there's been a lot of deterioration here. We can also look at something like SUI. This is one of the other charts that I feel relatively bullish on, just because of the fact that, look, we're flipping former resistance into support, right? This is a classic resistance to support flip. The only dilemma that I have is, once again, we're trading below the 200-day moving average cloud. If I go back to that key saying that I mentioned earlier, what we know for a fact is that all uptrends are characterized by the price of an asset trading above its 200-day moving average. This is not showing me that it's in an uptrend. I don't know about everyone else, but I want to own assets that are in uptrends. I want to own things that are going up. Right now, from a statistical perspective, SUI is not showing me that it's in an uptrend. So I'm a little bit cautious on this. But, look, where's my chart here on this? I think here's some unique alpha for everybody, right? I was one of the guys in August of 2024 telling everyone, sell Ethereum, buy Solana, rotate your bags. I'm a little bit of the opinion right now that the best trade you could be making, I'm kind of joining the Raoul Pal team here on this, but I think selling Solana and rotating into SUI, this is the SUI versus Sol chart here. Again, flipping former resistance into support, trying to reaccelerate to the upside, right? This could be really promising. We're basically trading at 2 cents right now on a relative basis. These local highs up here, we're trading at 2.8 cents. So if we can get that follow through back up to that zone, maybe make new highs, right? This would be a massive relative performance here to the upside and give investors a lot of alpha here, right? So
what's your potential price target for SUI all-time high this cycle?
Dude, I have
not financial advice.
Yeah, I think the way I'm looking at price targets throughout this environment is, if my cycle target for Bitcoin is 175, we're basically a 2x away from that. And so theoretically, on paper, these altcoins should provide anywhere from 2 to 5x leverage. So take your multiplier. And so if Bitcoin's going to go up 2x, then SUI should do anywhere from 4 to 10x from here. But that's a big ask, right? And we got to see the evidence, right? So I just take things incrementally, like, let's get above that 200-day moving average cloud. Then we can talk about making new all-time highs. Once we make new all-time highs, if and when we can, then we can start looking at like the 161.8% extensions, right? So this is where we can start mixing some of those things in. I want to take things really, I'm so cautious and defensive in this market environment. And a lot of investors are probably really confused, right? Because Tony, I've been coming on your show now for, I think, almost exactly like 2 years. I came on in like March or April of 2023. I remember because I was in Croatia. And I've been super bullish like this entire time. And now I think for the first time, people are hearing Caleb and Cubic Analytics in general, just a little bit defensive, a little cautious, wanting to protect profits, right? So this is a regime change, right? I mentioned it earlier. I think we've really transitioned from a buy the dip environment to a sell the rip environment. So I just want to be cautious, right?
Yeah, absolutely. Final item here, if I let you go, is there any hope for ETH this cycle, man?
Look, I don't want to say no, but on an absolute basis, because I think that there is going to be upside for Ethereum.
Yeah.
But relative to other things, relative to Solana, no. And I'm also now looking at SUI relative to Sol. I'm saying, hey, I might want to rotate the rest of my Solana bag, which is very small relative to my BTC bag, and rotate that into SUI, right? So if Ethereum is here, then we got Solana, then we got Ripple, then we got SUI, and then we got BTC way up here, right? So it's like, look, I wanna be focused on Ethereum as little as possible. Thankfully, I sold my entire bag almost a year ago, right?
Oh wow!
And it's basically not my problem anymore, is how I see it. And so I'm very happy with it not being my problem anymore, and I want to keep it that way, Tony. So maybe let me just share my actual Ethereum chart on this, if you don't mind.
Sure, yeah.
Where did I have this here? I come equipped with so many charts, you guys. Okay, here's ETH, right? just looking at the price structure here, look at this range basically right here at 2,000 to 2,200. There's so much damn price memory around this level. Resistance, a lot of noise through here, but perfect support briefly here in January of 2022. And then falling below that level, flipped it into resistance, flipped it into resistance, flipped it into resistance, flipped it into resistance. We finally get the breakout. We flip it into support. We flip it into support. We flip it into, I mean, my goodness, how much price memory is here. It's all over the place. And so now what are we doing? We're coming into that zone and we're potentially about to flip it into resistance, right? We get the undercut. Now we're retesting it once again. And this is a valid potential resistance zone. And, you know, Ethereum just needs to show me the money, right? Can we at least get back above this zone and I could start talking about maybe getting back to 2,800? Because as of right now, what are we doing? We're simply retesting a valid potential resistance zone. And it's not even potential resistance. We have firm evidence of this acting as resistance several times, right? So not only is this potential resistance, it's proven resistance. And we're retesting that level right now. So do I want to be a buyer on resistance? No, one of my favorite traders, he goes by Doc XBT on X. Shout out to Doc. He has a great phrase, and I don't know where he got this from, but it's "you break, I defend." So you guys create the breakout. You guys go ahead and buy the resistance. You speculate. You take the gamble. Let's get the breakout, and then once you do that, I'll defend the breakout. I'll buy the retest of the support zone if we get the breakout. But I'm not going to be the first one into the party, right? So, you know, I love that. I love that phrase. I love that saying. I've tried to implement it myself, and so Ethereum's on it right now. Hey, you guys break it, and then I'll try to defend it. But here's the thing. I'm not going to be defending ETH. I'm not going to be buying ETH. So, you know, if ETH gets that breakout, I'll probably just buy more Solana or I'll buy some SUI, you know? So that's how I'm feeling about things.
For sure. Well, Caleb, man, I appreciate your analysis. And, you know, I'm hoping maybe in a month's time, we're in a better environment. All this, maybe Bitcoin, the stock market all finds strength. And I don't know what the catalyst is, but hopefully, you know, it's not more pain ahead, but we'll see. But thank you so much, man. I appreciate your analysis. And everybody check out Caleb's newsletter. Link will be in the description.
Yep. Appreciate you, Tony. And like I said, the only thing I'm focused on, there's a big takeaway for everybody, regardless of what asset you're looking at. If you're looking at the S&P 500, if you're looking at the NASDAQ, if you're looking at ARK, if you're looking at Bitcoin, if you're looking at Ripple, if you're looking at Stellar Lumens, take your pick. If you're looking at Dogecoin, is it trading above or below its 200-day moving average? If the answer is above, good. If the answer is below, bad. It's really that simple, guys. So, you know, again, just apply that to any asset you're taking a look at and you're going to get a lot of alpha there. I promise you. It's very simple, but it's a tried and true method because, again, the one thing we know for a fact is that uptrends are characterized by the price of an asset trading above its moving average, which also means that downtrends are characterized by the price of an asset trading below its moving average. And I don't know about you guys, but I don't like to own things in downtrends. I only want to focus on owning things that are showing signs and strength of an uptrend. So that's the conclusion. That's the takeaway. And unfortunately, right now, we don't have a lot of assets trading above their 200-day moving average cloud. We've gone through a lot of deterioration here. And so I'm not outright bearish. I'm just extremely defensive in this market environment. And I'm so hopeful that we see a lot of improvement here over the next 4, 8, 12 weeks, whatever the case is. But the beautiful thing is, if we see those improvements, what that means is these individual assets are going to break above their 200-day moving average, and we're going to be able to pay attention to that and get the clear signal and get that money reallocated, right? So that's the big takeaway here, guys. It's not super nuanced, but it's nuanced enough. Let's just pay a lot of attention to these individual charts and let the charts guide us.
Absolutely. Well said. Thanks so much, Caleb.
Appreciate you.